All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we're going to talk to you about what's happening in the markets and how we are trading it. And today is Friday, February 24th. And yesterday, the S&P 500 snapped its 4-day losing streak. NVIDIA is on pace for its longest winning streak in history. But today, the important PCE Inflation Report was released. That is the Fed's favorite inflation gauge. So, what's happening there? How will the markets react? And most importantly, how are we trading these markets? By the way, if this is your first time here, hi, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. We're real traders who trade live accounts. So, therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So, trust me, we know our stuff and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And boy, is there, I mean, never a dull moment in the markets.
Moving around, and with the S&P, we were able to snap a 4-day losing streak yesterday. So nice little trading day. Even though we dipped a little bit, we finished near where we started the day. So nice day, and then some more data coming out this morning.
Yeah, and I think what was important yesterday is that we found some support at the 50-day moving average, bounced right back, but then I said this morning, boom, slicing right through. I mean, opening below the 50-day moving average. The golden cross still intact. So right now, the 200-day moving average, could this be the next support here for the S&P 500?
Yeah, and also to point out, yesterday we closed above 4,000. So even though we dipped, that 4,000 round number support held up. So we had a few different levels that were being respected, but today not so much the case. So a move lower and a continuation to the downside after a lower start.
Yeah, so let's take a look and see what happened here. And we mentioned it yesterday. Today, all eyes are on the core PCE price index, the Fed's favorite inflation gauge, and same as CPI and PPI and everything, it's also coming in hotter than expected, which is not
Yeah,
good at all.
no, this is troublesome for the Fed because it was the largest month-over-month reading in 8 months, or the largest increase. So it is a key number that the Fed looks at because it does measure goods and services targeted towards and consumed by individuals. So that's why the Fed looks at it, and it's an important data that in addition to CPI data that the Fed uses, and we have to decide or determine or guess as to whether or not this is just temporary, right? Maybe because of holiday spending or whatnot at the beginning of the year. It was the January reading, or if this is a sign that inflation is on the move higher again, right?
Yeah, we're not off to a good start this year. I mean, pretty much every single inflation gauge came in higher than expected. So this forces the Fed to probably do something. And right now, this is where traders are actually pricing in a 33% probability of maybe a half a percent point hike at the next meeting. And I mean, this, if we compare this and look of where we were here, I mean, look at this. Just what is it? A month ago, even a few weeks ago, we were at 82% here. A week
Yeah.
ago, that traders thought, now they're going for a quarter point, but now the probability of a half percent hike are sneaking up.
Sure, and this actually, it the quarter basis point hike, with everything that we knew, just seemed like a done deal. But with this recent trend and all of this data being released, that 50 basis point hike definitely gets put on the table as a possibility. Because there was another release, Marcus, personal income. This fell below estimates, right? So that came in lower than expected. However, no, yes, because the forecast was 1% and came in at 0.6%. But this was an increase from the previous month. And disposable personal income, looking into this data a little bit more, rose 2%. And this led to the largest rise in personal spending month over month since March 2021. So you have prices still high and you have people spending money. That's not what the Fed wants to get inflation back down under control.
Yeah, and that's what we are seeing right now in the probabilities. I mean, initially, this is what Fed Chief Powell said during the last meeting, that they are thinking about a couple of more hikes. Now it seems that or the markets are pricing in 3 hikes, and again, the probability of maybe a half percentage point is on the table right now for both
Yeah.
meetings, the March meeting and the May meeting.
Also, look at the one of the big things that traders really wants to see is or try and anticipate and guess is when the Fed starts to cut rates, right? And we had for months the potential to have that high rate and then see cuts. Even recently, there looked like there was a cut in December, at least based on probabilities here. But not only are we now looking at probabilities that don't factor in a cut this year? If you look at the percentages, Marcus, the 550, 575 basis point probabilities are higher than the 500 to 525 basis point probabilities. So now traders are saying not only does it look like, or, are we anticipating no cut in 2023, which traders had really hoped for, but possibly another hike even higher, which really wasn't on the table up until today's reading.
Yeah, and this is where we see that the 10-year notes now again scratching 4%, and they haven't done it in a while. So the fear of higher interest rates is on the table. The VIX is moving higher. The VIX, as you can see, the fear index has been low between 18 and 20, now trading at 22, a couple of days ago, even at 24. So fear is definitely setting in, uncertainty of what's happening. And the S&P right now, if you look at a weekly chart, on pace for a third losing week in a row after we had a phenomenal start into 2023. It seems that this rally is losing steam here quickly.
It is. It is.
Right? I mean, the Dow is already negative for the year. It's down 1.3%. The S&P still hanging in there. So for the year, up 2.5%. Also, the Nasdaq still up for the year, but the Dow already turned negative. And talking about the Dow, news from Boeing. Did you see what happened there?
Yeah, not the news Boeing investors would like to see. They announced that deliveries of their 787 Dreamliner were halted. It was mentioned that it was because of a documentation issue, according to the Federal Aviation Committee or Administration, sorry, the FAA. But I also saw that it was tied to a fuselage issue. So, nonetheless, the jets are halted.
Yeah, down 4.3%, which for Boeing is quite a lot because we see how quiet Boeing usually is trading. But I mean, we talked about Boeing over and over. It seems that they're getting these hits, that there is something wrong with their aircrafts and they're grounded, and then they're bouncing right back. So we will see how they get out of this one. Yeah, and then NVIDIA, we talked about it. I mean, longest winning streak in history. I mean, they have just been on a tear ever since they reached the low here of, what was it, 110, now doubled. I mean, it's just crazy how NVIDIA is up and away.
Yeah, that's a really impressive move there, and I mean down 2.5% today, but gosh, after a 14% gain the previous day, Nvidia investors shouldn't be concerned about that.
Yeah. All right, let's take a look at our positions and with the down day today, see what else can be traded. And let's actually, yeah, let me just zoom out a little bit so that we can take a look at our positions first here. CTRA. I mean, CTRA today bucking the trend. What do you know? CTRA up right now, 2.11. We can actually see if we can sell some calls against our
I
existing
was,
positions here.
I was just doing that.
Yeah, let's hop over to the calculator here really quick. See CTRA for next week and see if at the 26. We're getting super close. I mean, at the 26, bid ask 15 over 20 cents. We need a minimum of 17 cents. So
Yeah.
if we could get 20 cents, we would be at 35% annualized. That's not bad at all.
No,
That's
I
probably
like it.
something that I'll keep an eye on this, and I'll probably place that order because I have 5,400 shares. So this means that 20 cents would give me $1,080 in premium. That's pretty good premium. I'm okay with this, especially going into the weekend.
Yeah, I like it.
All right. Well, there we go. All right, Domino's Pizza. That's something that we traded yesterday. I traded the 297.50 expiring 295 expiring today. Right now we are trading at 303.49. So, I mean, unless Domino's Pizza right now drops another 3% today, I think we'll be good. And this expires worthless. And you took this trade as well, right?
I did. I did.
Yeah.
Yeah, look, it looks fine, and even if there's a drop, we own shares at 295. I'll take that.
Yeah. All right. We'll save Google here for last because there's something interesting going on here with Google. And then we have UNP. UNP, I already got assigned yesterday. So I already own shares at a strike price of 197.50. Have you been assigned yet?
No, no. So I sold the 195 instead. I wanted to go a little bit lower on that strike. Right now, I didn't get early assignment. I mean, those 195s weren't as far in the money as the 197.50s.
Right.
So it's not a big surprise to me that I wasn't assigned early.
Yeah, and then also on Monday they're paying out a dividend of $1.30. So on Monday we will see the stock price dipping by the dividend amount, usually around $1.30, not exactly, so but somewhere around there. So we'll see when we can sell calls against our existing positions and what happens here with UNP.
Yeah. I'm looking forward to seeing how this plays out. I think it's a good trade, and I would love to be able to sell calls and get a dividend on Monday.
Yeah, we definitely get the dividend. I get the
You
dividend
never
because
know.
I already
You
own
never
shares.
know.
I'll get the dividend, so that's definitely helpful. Okay, Google, super interesting here. So I got assigned at 108, and I'm still in this position. You were able to get out of it because you got assigned at a lower price at 103 or 104. Where did you get out? 104?
Yeah.
Yeah. Okay. On this upswing. So I'm in there. Right now, Google is attacking the support level that we have there. And this is why this morning I decided to fly a more aggressive rescue mission. Usually, what I like to see at a rescue mission is that we see a 30% dip. So if you look at this and we go for 108 times 0.7, so a 30% dip would be to 75.60. However, this is where I see right now Google has really found some nice support at around 86. I mean, this is support level that we had recently as well as in 2021. So that's what I'm looking for right now. So I sold some more puts at the 86 level, hoping to get assigned here because if I do get assigned, this would bring my cost basis to 99.80 or 99.20. That, of course, is much better. And I collected 80 cents in premium, no, 60 cents in premium, which will lower my break even here as well. So we'll see. They expire next week. Right now, Google down. And you like this idea of Google as well, right?
Yeah. I have an order in. I did not get filled. I was trying to squeeze out a little more premium, but I like Google at these levels. I was waiting to get back down to 86 or lower. I'm glad that I waited, right? One thing that I've mentioned to especially our mastermind members is especially in the markets that we've seen 2022, we could wait for the strikes that we want. That's been the case here. So yeah, I haven't been filled yet.
Yeah, I've been filled. So what do you think about the plan? When I do get assigned of being just shy of $100 with my cost basis, so realistically, my break even will be then probably around $4. So my break even will be at around 96. I think this puts me in a pretty good position here.
Yeah, especially with the ranges that we've seen in Google. I know that this recent pullback has been a little overdone and extreme, but you see those 85 to 105 ranges. So that means that you could start selling calls at the new upper range where you really weren't getting all the way up to 108. And I mean, realistically, we've been trading more in like a 86 to 102 range. So if your cost basis break even, is in that 95 to 100 zone, that's going to make it a lot easier to sell calls.
Yeah. Well, that's of course hypothetical because I sold the puts expiring next Friday. So we have a full week. And I'll see if I do get assigned, if Google dips a little bit more. If not, I'll just keep the premium, which is fine. It's lowering than my break even by a little bit. So I'm lowering my break even here step by step. But maybe there are definitely some more opportunities if they expire worthless to sell them again, because it seems that Google right now has a hard time recovering. I mean, they are in the AI, artificial intelligence war with ChatGPT and Microsoft. And just curious, how's Microsoft doing here? Microsoft also down, but definitely hanging in more towards the upper range here
Yeah,
because it seems that they're winning the battle right now. But will they win the war? That is the question.
it is.
I don't think that we will have a life without Google. This is
No,
really, really hard to imagine. So even though that is a temporary hit, I believe that this is a quality stock, and I'm happy to have this in the portfolio. And this is why I'm okay selling more puts. Now, this is where it comes to position sizing and money management here. So right now, I do have 4 positions. This one here, DPZ, most likely will expire worthless today. So therefore, on Monday, I'll have 3 positions in my portfolio: the shares at CTRA, the shares at Google, and the shares at UNP. And since I'm flying a rescue mission here, I'm reserving another spot for Google as well. So right now in 4 positions, and then on Monday, I'll be in 4 positions, leaving one more open because we like to have up to 5 positions at any given time. But didn't see anything too exciting today. There were a few that were popping up.
Yeah, close. Some maybes.
Yeah, so I mean, Lululemon, that's definitely an interesting one here with the strike price of 297.50. So that's not bad. I also believe that what else popped up? I think DHR. We traded it earlier this year, so that popped up as well.
WHR would be a maybe.
Yeah, Whirlpool. So there's definitely a few. By the way, is this helpful as we are going through this and show you a few potential candidates and showing you what we do with our positions? Because if it is, do me a favor and click on like, because this would help us a lot. All right, so yeah, lots going on. Let's see where the markets are overall right now. With what do we have? Almost 2 hours into the trading session, seems that the S&P 500 has found a bottom. Same here with the Nasdaq, also the Dow. So maybe we can pull a little bit higher, but it seems that we will definitely have a losing week in all 3 major indices here.
And then there's next week.
And then there's next week. So I'm excited about next week, and I'm excited about Monday. I'm excited about getting a dividend. Well, it's only ex-dividend, so the dividend will not yet be paid on Monday, but it's the ex-dividend date. So we'll talk more about this on Monday, and then also what exactly we do with our positions. But hey, if you found this helpful, give us a like, subscribe to the channel, and also take a look at this video in which we explain a little bit more of what exactly we are doing here, what this strategy is that we are trading. So check it out. Have a great weekend, and then we'll see you on Monday.
Happy trading, everybody.